So, what if instead of trying to figure out the market all by yourself, you had a team of expert analysts working for you? 24/7. Well, today we're going to explore how you can build exactly that, a virtual research committee powered by some of the most advanced AI on the planet. Let's see how this thing actually works.
Look, every investor knows this feeling. You are absolutely swimming in an ocean of news, reports, data, opinions. It's just endless. And it often leads to what they call analysis paralysis, right? You're so overwhelmed with information that you just freeze, you do nothing at all. So the real question is, how do you cut through all that noise to make clear, confident decisions?
Well, here's a pretty powerful idea to think about. Instead of trying to process everything yourself, what if you assembled a virtual research committee? Just imagine having 4 of the most advanced AI models all working together, each analyzing the market from a different angle for you. And this isn't science fiction. This is a very practical strategy that we can build right now.
Okay, so here's how we're going to tackle this. We're going to use a really clear 4-step process. First up, we're setting the rules for our AIs. Then, we'll see what the committee actually reports back. Third, we'll figure out how to find the majority vote to build a solid consensus. And finally, we'll cover the most important part of all, your final human decision.
All right, step 1. This is all about creating a level playing field. If you want to get a truly unbiased comparison from our AI committee, you have to treat it like a science experiment. And what does that mean? It means every single AI model gets the exact same set of constraints and the exact same question. This is our perfect control.
And here are those specific rules we're talking about. We're defining everything up front. The investment vehicle, in this case, a UK stocks and shares ISA, the amount of cash, the risk tolerance, and the time horizon. But honestly, the real kicker is that last one, a maximum of 15 holdings. This is so important because it forces each AI to only bring its absolute best, highest conviction ideas to the table. No fluff.
And this is the command that brings it all together. We give each and every AI this universal prompt. We're asking it to put on the hat of an investment advisor and propose a portfolio based on all those rules we just saw. Same prompt, same rules for every single one. The experiment is officially set. So with the rules in place, it's time to let them loose. Let's meet the members of our virtual research committee. And the key thing to get here is that each AI has a different analytical strength. It's just like a human team, right? Where you'd have your value specialist, a tech analyst, maybe a macroeconomist. They all bring something different to the discussion.
And this breakdown shows you their unique roles. Think of Perplexity as your super diligent fact-checker, giving us real-time data to verify everything. ChatGPT is the storyteller. It explains the why, the logic behind a choice. Gemini is the scout, with that broad, up-to-the-minute market view. And then you've got DeepSeek acting as the contrarian, the one who challenges the group to make sure we're not falling into groupthink.
Okay, so we have 4 separate reports in hand. Now comes the synthesis phase. The goal here is to take all these different opinions and combine them into a single cohesive strategy. We're looking for that majority vote, the ideas that are validated by multiple AIs and just naturally rise to the top.
We start at the highest level, asset allocation. So before we even dream about individual stocks, we need to agree on the big picture. How much should be in equities versus bonds or other assets? And the simplest way to find a consensus here is to just average their suggestions.
For instance, let's say our 4 AIs suggested equity allocations of 60%, 70%, 65%, and 55%. You just add them up, divide by 4, and boom, the average is 62.5%. It's really that simple. This basic math gives us a solid, balanced backbone for our portfolio. Now we get down to the nitty-gritty, the individual stocks and ETFs. The process is basically a straightforward funnel. First, we cross-reference every single suggestion from all 4 AIs into one big list. Then, we create tiers. Anything suggested by 3 or even all 4 of the AIs, that's Tier 1, our absolute highest conviction picks. If it's suggested by 2, it's Tier 2. And if only one lone AI suggests it, we generally reject it because it just lacks that crucial consensus validation we're looking for.
So, let's just make this crystal clear. The Tier 1 picks are the ones where the majority of your committee agrees. These are your non-negotiables. They form the undisputed core of your portfolio. The Tier 2 picks, those are your secondary candidates, really useful for filling out the remaining positions if you still have room after you've put in all your Tier 1 ideas.
And that brings us to the final,
and without a doubt, the most critical step of this whole process. The AI has done an incredible job. It's screened a vast universe of information and found the highest conviction ideas for us. But it is a tool. It screens, it suggests, it analyzes. You, the human investor, you make the final call, always.
Before you invest a single dollar, you have to run this final due diligence checklist. First, risk calibration. Does this final portfolio actually feel right for your personal comfort level with risk? Second, a simple liquidity check. Can you actually buy and sell these things easily on your platform? And third, a fundamental review. That means a quick manual check of key numbers like PE ratios, just to make sure an AI didn't make a mistake or use old data.
This quote just nails the entire philosophy, doesn't it? This is not about blindly trusting some algorithm. It's about forming a powerful partnership. You leverage the AI for its incredible speed and data processing power to do all the heavy lifting, the screening, and you apply your human judgment and common sense to perform those final, critical checks.
So when you put it all together, this combination of AI-driven consensus and human oversight creates a really powerful, repeatable process, which leaves us with a pretty big question, right? Is this blend of machine-scale analysis and human wisdom the new standard for modern investing? It's definitely a compelling vision for the future of finance.